What's up, guys? It's October 31st, 2025. Happy Halloween, everyone. We're doing a 10-minute breakdown of the E-mini where we talk about trap traders, second legs, and market context. If you guys want to see how I'm applying these trades live, check out the membership section where I go over my trades, winning or losing, all based around breakouts and pullbacks. So let's get into it. Hope you guys had a good Halloween. I am doing this video on Saturday. Weekly chart. Bulls are now not getting good follow through. At one point in time, this was a big bull bar, and then it started to reverse down. Now it looks like a doji. And we can see a closer look of that on the daily chart. We have a breakout, and it pulls back, but this was the rally, and now it's selling off. When you have a big bear bar, that actually did get a second leg. Leg one, pull back two. So we'll see if there's still a small gap here, but I'm sure bears want to close the gap, get to the E-mini and get the breakout. Bulls want this price action right here to be nothing more than a leg one, pull back leg two. So we'll see what happens, who gets what in the following weeks to come. We have 2 months left in the year. It's an interesting time to be a trader because we are trading at all-time highs. And I think it'd be like, let's just imagine if this was a really big bear bar that could set the tone for the next couple months, which lead into next year. Or if this is a really big bull bar coming up, same thing could happen. I just think it's an interesting spot to be at all-time highs with bad follow through and the year's coming to an end. We've been rallying all year, so we'll see how it goes. Okay, let's get into it. So we have a gap up, bar one, bear bar closing out slow. Bar two is an inside bar, and it rallied and then sold off, so somewhat of a pullback. And then bar three is a second leg down from bar one. We have a deeper pullback, bars 4 and 5 and 6, and then bar 7, bear bar right to support, leg one, pullback leg two, pullback leg three. It's a wedge bottom, testing the gap here. It looks like there were more buyers at low, so right now we've been in a trading range. You could look at yesterday's price action. Right here we're in trading range, and we're right around the same spot. So we had a trading range, sold off, and then rallied back into it. 70, 79 yesterday, 79, strong to get second leg up. Leg one, pull back, leg two. Let me draw that. Leg one, pull back, two. It was a deep pullback. 3 to 4 legs down. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. Bar 11 has bad follow through, it sells off and then rallies. Then we get another rally here, strong to get its own second leg. Bar 12 is actually not an inside bar, so we keep going. It broke out of bar 11, but then sold back off. Bar 13, 14, 15, bull bars closing on their high, strong to get a second leg, and that pullback happens right here, and a small second leg, 21, 22. Ends up being a second leg trap, leg one, pullback leg two, right around the high of the day, just below bar one, kind of testing its midpoint. And there were more sellers. That led to a nice 2 to 3 legs down. 2 major legs, leg one, pullback leg two, and each of those legs were broken up into 3 legs. Leg one, pullback leg two, pullback leg three. Leg one, pullback two, pullback leg three. 1 second here, guys. Thank you. So 23, 24 becomes 22, 23, 2-bar reversal. 23 gets followed through 24. Quick pullback 25, breaks out 26. 27 sells off and reverses, kind of giving the day looking like a double bottom. And then you see a lot of bulls got filled on bar 28. At one point, this was a big bull bar, but then reverse trapping them. They're going to have to buy more lower. When bulls buy up here, they're going to buy down here, get out, break even, and that causes a sell-off. Let me draw it for you guys. See how that works? Trap bulls buying all the way up here. Some weren't able to get out, break even. Most were. Some bulls will scale all the way in and then make money on the rally up, thinking that it's a trading range from yesterday. So that creates enough selling pressure, 30 through 34, which also comes in 2 legs. Leg one, pull back two, pull back three. It's really important that we look at the markets from the same perspective, leg counting, market cycle, breakouts, pullbacks. That way, if our thinking can get consistent, our actions can get consistent, and our trading will become consistent. So overall, we had a breakout on bar 62 from what Wednesday it looks like. Very deep pullback. Got a second leg, third leg. So breakout, channel phase, and then channel phase goes into a trading range. So overall, multi-day market cycle, we're in a trading range. But just for today's market cycle, trading range breaks out, starts to channel down 2 to 3 legs, and then after 2 to 3 legs, we go back into that trading range. So smaller time frame market cycle, we're in a trading range. Higher time frame market cycle, we're in a trading range. Deep pullback 35 through 38. This is a rally. So now, if you didn't think we were in a trading range here, we have a micro channel against a micro channel, so that's also trading range behavior. But there's enough bearish momentum to get second leg down, and that's what we see from bars 38 to 47. Sells off. Then we have the back half of the day, which ended up being a rally. We're trading around yesterday's low, trading range behavior, bears getting bad follow through. And do you see how much distance the bears already traveled? This much distance and then a breakout is rare. When we see a breakout, we don't like, the market's already done very close to its full range if we're looking for a breakout below here. Does that make sense? Like, this is almost the market's entire range, very close to yesterday's range. So to expect a breakout, that means we also are expecting the range to double almost. So here, when we got the breakout, we got this breakout of this trading range here. There's still some range to go. So we could expect a breakout. This actually looks like a nice retest of the 11 low. So think about that. If you got trapped at lows, the market's traveled a lot. We're very close to its full range. And we're in a trading range from yesterday's low, bar 79. So could start a rally, and it does. The rally started with a small bar 47, sells off in the rallies. But then look at this leg here. Leg 1, pull back leg 2. They get the breakout. This could be the breakout. This could be the breakout. But what matters is that we're in a trading range. We're at trading range lows. And the target's going to start being pullbacks for the bulls. And then they hit every target. They almost made it back to the one high, which is pretty impressive. Let's speed this up a little bit here. Bears getting trapped. Look, bears get trapped down here. They short more here. Buy back shorts. Boom, 1.5 bars met. This is how I structure every trade, guys. Bar 50 to the high of 53. Okay, 50% pullback wouldn't get filled. Some of you might try this, and I put my limit orders one tick above my entry, so in this case I would get filled. If I pulled from 51, it would have worked. And then you just rinse and repeat. If the breakout looks like you can get a second leg, try and catch that pullback. Maybe you have 3 legs up here. Leg 1, pull back with 2, pull back with 3, and you might catch an entire second leg here. But then you say to yourself, oh, the breakout resets, the breakout resets on bar 55 because it gets followed through. Leg 1, pull back with 2, and there's a small leg 62, 63. Boom. And actually you wouldn't even get filled, so it might be hard to get filled because after bar 66, the rally starts to take off and becomes climactic. You would have to buy this close. I think it's a hard buy because the higher time frame resistance. Could buy for a scalp, pull for a couple points, and then get out.